Welcome to Investors Insights. Our topic today, it's a hit. H.I.T, housing, inflation, and technicals. That's what we're talking about this morning. And as we looked at the acronym, we're like, let's talk about this. All three are very important. Our clients are calling us about these topics. So I have my distinguished colleagues who just came out of a meeting with me with debate and discussion, Bobby Norman, Trey Booth, and Ty Miller. And it's, gentlemen, as always, I enjoy our discussions. You do great research throughout the week, and then I appreciate the work you do over the weekend so that we can do this vlog and provide information to our clients. So let's start off because housing is definitely a topic. Bobby, you want to talk about that? You really brought some great insight on what's taking place in housing right now.
Yeah, as inflation expectations remain a concern, we are watching rates carefully here. One area of the economy and a popular topic among clients continues to be housing and real estate value. So with the average 30-year fixed rate mortgage above 6.5%, housing affordability will be a tall task for the new administration. So looking at this first chart here, our estimated monthly mortgage payment derived using the 30-year fixed rate mortgage and the median existing home price continues to remain elevated. Our work has shown that the median home price is up 31% from January 31st, 2020, but our estimated monthly mortgage payment is up more than 112%. So those are big numbers. That's a big jump over the past 5 or so years. And so the problem remains that the demographic of Americans who can afford a home at these rates and these price levels is very slim. The other factor we're looking at can be seen in this next chart, and that is supply. Rates have brought supply demand back into balance, but we're not completely out of the woods yet. Higher rates have done their job in balancing out supply and demand in the housing market. And this spring and summer should be the first season in which we exceed pre-pandemic inventory levels. Obviously, there still will be a growing disconnect with homeowners' appraised values at the height of the pandemic relative to affordability at today's rate. So we'll continue to follow housing carefully because two things. One, it's an important part of the economy, and it is a big part of our clients' net worth. Their real estate, whether it's primary homes or investment homes, it's a big part of our clients' lives and net worth. So we'll continue to keep you posted on housing.
Yeah, and it's going to be a topic, I think, throughout the year. So really appreciate your insight there, Bobby. And Trey, you jumped in this conversation when we were meeting in regards to inflation.
Yeah.
As Bobby talked about the cost of housing now, where people are seeing inflation across the board. Talk to us more about that.
Yeah, thanks, Greg. Yeah, Bobby, you're right. The housing is a big part of people's net worth. It's also, because of that, it's a big part of the inflation picture, what goes into CPI. And so last month, we got some disappointing news out of inflation with both CPI, Consumer Price Index, and PPI, which is the Producer Price Index, higher. And you can see on this chart, which shows those two numbers over last year, and I put PPI there in orange. What was concerning about last month is that PPI crossed above CPI. So that means the prices that producers of goods and services are paying have risen at a faster pace recently than what consumers. And producers typically pass those costs along down to consumer. And so is that an early indication of things to come for CPI? We're going to get both of those reports this week. Hopefully we see that as a data, that data point as an anomaly, and PPI comes back down below consumer. So very important data point. The Fed is watching. The Fed's definitely on pause right now. What happens in housing has a large impact on both these numbers, so a lot of flow through. But where we see things going, a lot of people were hoping for a lot of Fed cuts. It's going to be very hard for the Fed to cut if we don't get inflation at least to stay flat. We've talked on this vlog a lot that traditionally speaking, historically, inflation comes in two waves. We very much want to avoid that second wave. We had the first one, nobody liked it. Let's not do it again. So we're in that law that the second wave starts. Would start at this point or a little later. So something we're watching very closely because we need to get ahead of that if it looks like we got a sustainable trend in the wrong direction.
Yeah, no, that was well said. It definitely is another topic that I think we will be dealing with for the rest of this year. And as I've used the word navigate before, we will be navigating through it in relation to our clients' financial blueprints and their portfolio performance. But it's a topic that will impact everybody. So thank you, Trey, for your insight. And Ty, you know I'm a nerd and I love it. I love research, and I really like fundamental analysis as well as technical analysis. And of course, you got my full attention this morning in our discussions about the technical aspect. With what Bobby's talked about, what Trey's talked about, now talk about the technicals in relation to the market and the economy.
Yeah, it may feel like there's kind of this, enhanced volatility in the market. And I don't think, you would be wrong, but it's important to see where are we at now and where have we been, kind of historically. And so if you look at this chart, this is post-election data since 1952. We haven't exactly followed it to trend. However, one thing that is usually common in all these election years is you kind of get this choppy period in February, and February has been historically kind of a weaker month. But then you start to see another kind of rally as we get through February. And so that doesn't have to be the case this year. We have a lot going on, a lot of, volatility from one day to the other right now. But as things, hopefully settle in, maybe we can get back in line of what this chart shows and what it historically has been. And then just to keep in mind of where we're at right now currently for the S&P, we have some tactical support at 59.24. We're a little bit over 6,000 right now. But then, even if we breach that level, the main support that we have right there is 5,700 roughly. And so that's the level that we're going to keep an eye on for ourselves is as long as the S&P 500 can stay above 5,700, that's kind of, a good sign. We may have some chop along the way, but that's the important level that we, of course, want to keep an eye on as we battle this kind of dichotomy in the market where the third year of a bull market is typically kind of a grind, but the first year of a presidential cycle is typically good. And so a lot of factors to weigh on the technicals here and the seasonality of things. But, that 5,700 level, again, is something that we're going to be keeping an eye on.
Yeah, and it's very important. And I always like to say you have to have both. And we use both here at Five Plan Partners, the technical analysis as well as the fundamental analysis. 2020 was a great example of where fundamental analysis was looking really positive, but the technical analysis was looking really weak and concerning. And we chose to go that way as we allocated our portfolios, or reallocated, I guess I should say, in relation to our clients' financial blueprints. And that proved to be very beneficial. So it's important. And we like to pull back the curtain so you can see the debates, the discussions that take place, the way we look at things, and also that just because something's the headline for today or this week or even for the month, it may not be the most important thing you need to be watching. And that's why we bring you these vlogs. It's why we love to have one-on-one conversations. We'll do Zoom and WebEx meetings with you, talk on the phone. And of course, also from the standpoint on our podcast, Facebook, LinkedIn, Twitter, we're putting all this information out to YouTube just to keep everybody informed. It's not dull, and you know that. And so we're going to keep you up to date, and we're going to keep our eye on things. And we thank you for believing in us. And just as always, as I say over and over again, we come in this office every day striving for our clients' lives to be better, richer, fuller. And I'm also proud to tell you here in another week, we'll be celebrating our 20th anniversary here at Five Plan Partners. And so we've got a lot to celebrate. So hope you have a week of celebration, and we will be in touch. Thanks.